The market's plunging. Panic is everywhere. People are selling. Media is freaking out. And it feels like we're heading into a free fall. But yesterday, a TradeWave user said something that really stuck with me. He asked, I guess TradeWave isn't much help in a crash like this, is it? The truth is, this is the best time to use TradeWave. So, why this moment is made for TradeWave? When the market crashes, technical charts are often useless. They just tell you what already happened. But TradeWave shows you the context. It lets you step back and ask, have we seen a drop like this before? Is this an outlier or actually pretty normal? When have we bounced in the past after drops like this? So I ran an analysis on SPX in TradeWave, not just any time frame. I looked at all years and presidential election plus 1 years like this one. Here's what I found. Based on past data, there's a high probability bounce zone coming up. I'll show you exactly where that is. So I've saved these date ranges when I was doing the analysis, so I can quickly pick them. So let's pick the first one. Here's the first one to look at. I've selected presidential election plus 1 because that's the year we are. PE plus 1 for the date range of beginning of the year until the 7th of April. Look at this trend chart. Trend chart is showing really volatile times. This is an average directional movement of all of the presidential election plus 1. Usually when you see these crazy moves like this, that means this is really volatile. What if we just look at all the years, which is 97 years? You see how smooth it is? When we looked at all of the years, it's typically very smooth, but P plus 1s seem to be very volatile. So back to P plus 1. Here we go. So let's take a look at the date range and look at the gain and loss for each of the year of P plus 1s. Right now, 2025, we're down 13.54%, but 2013, 2017, and 2021 were winners. And then 2001, 2005, and 2009, all three were losers for the first quarter. Actually, this is slightly longer than first quarter, but the reason I picked this date range is because it's right beginning of a trend up move. So why am I saying I expect, based on high probability, there's a high chance of the markets turning around and a bullish period starting, and that's because of the trend chart. The trend chart is showing right now an up move. Let's take a look at what that means. That looks like actually. Here it is. Look at that. That is from the 7th of April, which is Monday, and August, and it's all the way, it ends at August 2nd, which is right at the peak before the trend starts going downward again. Let's take a look at gain and loss of these years. 1929 until 1969 was all positive, or some years was flat positive. They were losers in 1965, 69, 73, and 81, and a flat up 1977. But starting from 1985 on, it's been positive during this date range. We can look at MFE to see really how far it went up. It actually was pretty much, except for 2001, all the other years, the peaks are at the end of this date range. It really followed this trend. How about drawdowns? MAEs, the drawdowns. The drawdowns were never really that much. Look at this. The biggest one is minus 4.62% in 2005, and then it went up and closed at 4.45% for this date range right there. So in the middle of this date range, in the middle of the summers, you can also see there is this downside. Let's take a look at that one. Here's that down. Let's get rid of that. So during this period, which is the 20th, and by the way, just to make sure you guys see it, let me just show you. This is what I'm talking about. This is the date range right there. You can also go and take a look at the stats in more detail on the second chart on the right, but let's go back here. So the market during this period of time, 2013 dropped over 5%, 2001 7%. It's 1949 to 69 or 73 were all losers also during this period. So this would be a weak period during this longer date range, but right at the end, again, it goes through a sharp up move, which is this one right there. And look at that, 1985 through 2021, they were up. What was the drawdown? The drawdowns were somewhat higher, but not that much, 3.51%, 4.35%. But then look at this. It follows a very sharp down move right there. Let's take a look at that down period. This down period is from the 3rd of August until 21st of September. Goes very nicely down. It went down in 2021 also. Went down a lot in 2001, 20%. And look at this other bottom right there. You can even extend it there. You see, these 4 years were winners, and then a few other negative ones. But then an up move starts, and I would say this is a very bullish time. It typically is. End of October typically is a most bullish time of the year. Let's take a look at what that looks like. Look at this. It's been bullish. The PE plus 1 years, 1977 all the way, all of it. And then 65, 69, and 73 were negatives, but then it's a very bullish time. How about till end of the year? Till end of the year is the same, very bullish. Starting from 27th of October until end of the year, it's just been very positive. So this is what I wanted to share, that chances are that if history repeats itself, we are going to start an up period. And what you're probably going to hear from the financial news media is that the tariffs are now factored into the price. That's why prices are going up now. That probably is something I'm expecting to hear. But this should give you about a context about how does this year compare to other similar years of presidential election plus ones. All right, that's it for today.